my lender, my insurance broker. We have inspectors. We don't have an inspector on the call, but I do have inspectors that I work with. Your closing attorney. I also have some key players with some down payment assistance programs that we offer here in the state of Georgia. So my team and I are dedicated to helping you to go through the process. One of the things I'll just encourage you all, if you're new to the process, patience. I know you're all muted and I can't hear you, but just say that to yourself, patience. Have that in your mind. If it's something that you want, it will happen. I've been very blessed to have lenders that I work with that they literally will tell you what you need to do to be able to obtain home ownership. So I am a realtor wherever you are. I'm a realtor here in Georgia, and I'll be happy to work with you if you are in Atlanta. But if you're in another state, please find a realtor. It's no charge to the buyer to work with a realtor. So did you all hear me? There is no charge to the buyer to work with a realtor. I think a lot of times people feel like, oh, I could just do it on my own. I don't have the money to pay anyone to help me. So the realtor fees, the commissions are paid by the person who is selling the property. So just kind of keep that in mind. My job as a realtor is to walk you through the process. So the first step you should do is just identify a realtor person that you trust. I walk my clients through every step of the process. In fact, prior to this call, I have a client who's trying to get to the closing table, and we were troubleshooting and strategizing of how to conquer the IRS. If anybody have any ideas, please drop it in the chat. And so, but that's what we do. We are in it with you. We're your advocate. We're your cheerleader. We're the one to just help to guide you through the process. I don't expect for my clients to know everything. And so my motto is I just take them one step at a time. I take them in small, manageable chunks. And so that's what I want to do with you all today. We will give you a brief overview of the home buying process. After today, you will receive a follow-up email from me. If you would like to have a one-on-one to kind of discuss your goals and your situation, I'm happy to do that. I'll have calendar dates and times available, and we can schedule a time where we could just talk about your individual journey and how to help you to reach your goals. One of the things, of course, COVID has changed all of our lives in a number of different ways. But I would say, as I reflect, one of the things I'm most grateful for is COVID has pushed me to do a lot of self-reflection. And you start to realize, like, you're cleaning out your house, you're cleaning out your closets, you're cleaning your office, and you find that old to-do list from a long time ago that says, figure out if I qualify for a home. I have tons of to-do lists that I have uncovered. I've actually had a chance to read a book, which is really exciting. Pre-COVID, life is so busy, and with children and working and, helping people to find homes, you find that you really don't have time to do a whole lot of leisure reading. So I've been grateful for that time to really be able to reflect and to get back to the goals that I have set for myself. So COVID for me has been about realigning with what it is that I had already written down that I want for myself. And so I know that because you all are here today, that COVID has influenced you in that way as well. And so you're taking, some of you may have seen presentations before, but this is another step closer to helping you to realize your goal. So I just want to talk a little bit about some of the advantages I feel like to owning versus renting. All of us, we have to have somewhere to stay. So whether you're renting or you're owning, so whether you are owning, paying for it for yourself, or you're renting, you're helping the landlord to pay for that property. I have a client who I just closed actually last week, and he's in his young 70s and has lived in an apartment. And he's like, I want to buy a house because I am tired of them telling me what I can and cannot do. And I pay my rent on time every month. I don't know if anybody feels the same way. So the advantages to owning your own home, you have that privacy and the ability to do the things that you want to do at your home. the biggest thing for me for owning your own home is the equity. And so equity, when you think about equity, is basically how much you owe on the home and how much that home is worth. And in most cases, you already go into the home with equity. When you put down that down payment, or hopefully you be able to take advantage of some of the down payment assistance programs that my partners are offering, you already go into that home with built-in equity. So equity can work for you in a number of different ways. If the home, for example, I just want to give you an example of equity. Let's say you owe $100,000 on that house, but the home is worth $150,000. So if you sell that house today, you could potentially make $50,000 off of that house. That's equity. And so you're able to use that money maybe to reinvest in a new property or save it. Or sometimes people are, you may have kids going into college, or, you want to downsize. You can use that money in the ways that it works for you. Another advantage I feel like to owning that I love are the stable year-to-year costs. Mr. Jerome Jackson, who is the lender, who is on the line, he is going to break down all of the costs associated with a mortgage. But I don't know, one of the things that my client recently have told us, like, every time I turn around, they are going up on my rent. Like, I have a client that literally started off living in a property paying about $950 and lived there for 3 years, and he's at $1,200 a month. So one of the things when you buy a home, the costs are pretty stable from year to year. And that's really nice. For me, I like stability. I like to know what I'm going to have to pay from month to month and from year to year. And so that's the part too that's extremely important. And also just the pride of home ownership. It's something that you have. You start building your wealth building journey, legacy building. If you have young children, it's something that you can pass on to them. And so the pride of owning your own home, to know that this is something that you worked hard to achieve, is also just something super special about that. I just want to take a little time and just briefly walk you through the home buying process. And as I mentioned earlier, the first step is to go ahead and identify a real estate professional who can help you through that process. One of the things as realtors, we have a team that support us. So we have, as I mentioned, we have lenders, we have inspectors, we have closing attorneys, we have insurance brokers, we have contractors, to include, we have plumbers, HVAC people, we have all kinds of people who can help you throughout your home buying experience, the process. And so when you identify that real estate professional, they will be able to walk you through every step of the process, okay? And the next step, and oftentimes realtors have these connections, they have lenders that they've worked with on various deals. And sometimes people like to go to their credit union, or they may have someone they've already talked to. But I always encourage you to talk to your realtor, because they have a relationship with that lender, meaning that they can call them at 7 p.m. Jerome knows about that firsthand, and text them to figure out if there's an issue. And that's what you want. You want a team in place where the parts will continue to move. You're not limited to a 9 to 5, like, oh, it's 5 o'clock p.m. That's it. I can't talk to my lender anymore until Monday morning at 9 a.m. because you go under contract on Saturday. So you would like to be able to have the abilities to reach out to your lender if there are any questions about your money, your pre-approval amounts, or if you need a pre-approval letter. And so your real estate professional should definitely be able to connect you with those people. I have a phenomenal team that I'm very proud of, that they are in the thick of it with me, regardless, whatever it takes. I feel like my lender, Jerome, he educates people financially, which is what you want. You want someone who you trust, because the lender, it gets personal, because they're in your financials, they're looking at your bank statements, they're looking at your tax returns, they're looking at how much your W-2s, how much money you bring in, how much is going out. So it's very personal. But I do want to let you know that although the realtor and the lender often have great relationships, the lender will never discuss your personal financial information with your agent. One of the only things that the lender, the main thing that he will provide to me is a pre-approval letter or a pre-qualification letter. And Mr. Jackson will explain the differences between the two. But that lets me know how much money you have to go shopping. And so that's kind of the next step in the process, to go ahead and to secure a pre-approval. There are documents that you need to go ahead and to secure that. Of course, bank statements. I think we all, a lot of people do online banking. Some of us don't. And so if you know right now that you're ready to get into the home buying process, go ahead and find your little box or an area where when those statements come in the mail, you can just drop them in there. And you know that you'll have them when you need them. Because oftentimes bank statements, you know, we may have one in the file and one in the pile waiting to be opened, but you just need to have a home buying box. And so as the documents, your pay stubs come in, I know a lot of people do direct deposit, and oftentimes you don't even look at your pay stub. So print them out, put them in that home buying box. Your bank statements, when they come in, put them in that home buying box so that you'll have all of your documents organized. Because the lender, they are the people who are going to help to make sure you are able to have the funds to purchase your home. So they are giving you, FHA, for example, requires that each person puts down at least 3.5%. If you're getting a conventional loan, they require that you put down 3%. So your lender and his team, they are trying to qualify you for 96.5% if you're doing FHA and 97% of the cost of that home. So they have a lot of money on the line. So they're wanting to know, can you afford this house? How much money is going out? How much is coming in? Oh, what happened here? Oh, you made more money this month. So you just have to be prepared with your documentation. That is really, really critical. So when you're in the home buying process, to be organized. So when I sit down with new clients, that's one of the first things I tell them. Go ahead and get organized. Pull together your bank statements. Find your W-2s, find your tax return, find your pay stubs so that you are prepared for when the lender starts to ask for those documents, you can just put your hand on them and send them straight to them. To me, this is the fun part of the process. Like after you receive your pre-approval, we start to talk about your wish list. What is it that you want in a home? We all want the perfect house, like everything that we want. And sometimes like the conversation I always have is like, what are your non-negotiables? Like, what are the things you absolutely need to have? And so I talk to my clients, I ask them all kinds of questions about what it is they're looking for in a home. And I start the hunt. I put them in my system where they're able to search on their own, and they'll also receive daily, a list of houses daily that they can check out. And they'll let me know like, oh, I love those, you know, I love that house. Like, let's go check it out. And then we hit the ground running and we start to look at different houses. So once we've identified what side of town you want to be on, what type of house you want, we will go out and start to look at those. And so with T. Bailey Realty Group, we hit the ground running. And if it's what you want, we work hard to make sure you get very, 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 very close to what it is you are wanting in your home. And then it becomes the process of the paperwork. We're making an offer. And that's where I am your advocate. So we'll talk about what it is, the price of the home and how much we're going to offer. And if you need money towards closing costs. So we'll talk a little bit about closing costs and what all is entailed in your closing costs. Ms. Elaine Turner, she's our insurance broker who is on the line tonight. She'll talk about your homeowner's insurance. That is a part of your closing costs. She'll tell you all about the things of how to find the best policy, how to shop around. So that's a part of your closing costs. Prepaid taxes. So there are a number of costs, like a whole lot of costs that are a part of your closing costs. And so the sellers and the buyers share in the responsibility of paying those costs. And so we will kind of talk about how much we want to ask the seller to contribute towards your closing costs. And I just want to take a brief moment and talk about the costs that are associated with purchasing a home. Most of you have heard of your earnest money, right? And so earnest money, I have a phenomenal coach and mentor, Kiki Adams. I love the example that she uses for earnest money. Is it's like layaway. And so you put your money, we identify the house and say, yes, this is it. And so we submit the offer and we'll say a minimum, earnest money is a minimum of $1,000 up to 1% of the purchase price. So if the house is $1,500, 1% of that is 150,000, 1% of that is $1,500. And so when you put up your earnest money, it's showing that seller that you're serious about this home. That is money that will show up as a credit at the end of your transaction. So it's not like you're just giving the money and you never see it again, but it holds your deal. So for you, the earnest money, if your team, which your team will, if you work with T. Bailey Realty Group, will do everything right to protect your earnest money. That money will be a credit on the end of your transaction. For the seller, the earnest money is money that should something go wrong, or we don't do what we're supposed to do, or we're not communicating, or it's 2 days before closing, you just decide, I don't want the house. No reason, you have a loan approval, everything is all good, you decide you don't want the house, then the seller can come for that earnest money because you've held up the opportunity for them to sell to someone else. But when you're working with T. Bailey Realty, you don't ever have to worry about that. I've had 100% success with my clients protecting their earnest money. But again, it serves as a credit at the end of the deal. So a part of my conversation with my first time clients is savings. It's important that you have monies on hand that you can use to purchase your home. Yes, there are down payment assistance programs, and we're going to have them on in a little bit, that will support you in your down payment as well as towards your closing costs. But before you get to that point, when you submit an offer and your offer is accepted, your earnest money will have to be paid within 3 days, pretty quickly, within 3 days of your contract being accepted. And so you don't pay the earnest money to me. You don't write it out to T. Bailey Realty. I am an agent with Palmer House Properties. That's my brokerage. And my brokerage will likely be the holder of the funds. Sometimes the closing attorney is the holder of the funds. The next cost associated with the home is a home inspection. So our offer has been accepted. We've paid the earnest money. Now we're in this period, what we call due diligence. And due diligence is that period of time where we can look at that house up and down. We will have an inspected by a professional inspector. We'll go and visit the house as many times as you want to, but that's your period of time where you have to firmly decide, yes, I want this house. Or you could say, no, I had a dream. This was not the house for me. I don't want it. You can walk away during that due diligence time, free and clear. You get your earnest money back. We start looking again for the right home for you. But the home inspection, that price ranges. I would say $275, that's on the very low end, to about $600. So on average, it's about $400 for your home inspection. And that's for you, the home buyer. That's someone to come out and look at every inch of that house, from the roof to the foundation to all of the appliances to your hot water heater. They're looking at everything. And as your realtor, I am there with you for the home inspection. It's also your time to be able to ask questions. Like, what is this? And can you explain this? So your home inspector is the person that you are hiring to tell you everything about the home. We will typically receive the inspection back within 24 hours. It'll be full of pictures, the information about the home. And then from there, you may say, well, Tianna, I really need them to fix that leak in the garage. And so I will, as your advocate, approach the listing agent and ask them for, we'll do an amendment to address concerns. That's the name of the form. And we will say, we love everything about it. However, here are the things that we would like for them to repair. And they have an option to say yes or no. And if they say no, we'll have a conversation to figure out, is that a deal breaker for you? And so that's what I'm here for, to kind of help you to tease out the things that you should approach the seller about. Typically, we focus more on major issues. If you have a leaking hot water heater, if there are issues with the roof, noticeable issues with the HVAC system, those are often things that we definitely want to address with the seller before moving forward with the deal. And then the other cost would be your appraisal. And so that's something that you will pay directly to your lender. And Jerome will talk a little bit about that when he chats. When he has his talk, he's going to tell you about the appraisal. So number one thing about the appraisal is we need the house to appraise at the value that you're purchasing it for. No one is going to give you money on a house that costs, you want to purchase it for $100,000, but it's only worth $75,000. So the appraisal, that is a fee that usually ranges between $400 to $600 that you will pay directly to the lender, and that person will go out to assess the property and come back with a full report of all the research they have done to let us know if that property has appraised, supports the sale price. And again, those are not people that you have to find. Those are people who are a part of our team that we already have in place. No, sorry, my alarm is telling me it is time for me to wrap up. Other costs are closing costs, and hopefully Ms. Tracy with Georgia Dream, as well as Mr. Art with Fulton County Community Development, will be able to tell you about some of the great programs that they have, as well as NACA, Damien with NACA, programs that they have in place that will help towards your closing costs. And then, of course, the down payment. So if you are a conventional loan, the minimum down payment is 3%. Of course, you can do more. With FHA, the minimum is 3.5% of the cost of the home. So just to let you know, just more immediately, when you're thinking about purchasing a home, go ahead and have $2,000 to $3,000 on hand that pretty much will go quickly, because once you're under contract, you'll be required to pay your earnest money within a couple of days. Then we'll also go ahead and move forward with scheduling the inspection. And then the appraisal comes about 10 days, another week into that. So the monies will seem like they're going away pretty quickly, but it's all for a good reason, to have that pride in home ownership, to have that privacy, and then most importantly, to start the wealth building journey for your family. And so again, the dream team, I have a dream team. My dream team is on the line tonight. It's going to consist of your realtor. If you are in another state, definitely identify a realtor, a real estate professional who can help you through the process. Here in Georgia, I would love to work with you to help you through your process. A lender. You want a lender that understands your needs and who's able to just support you through the process. Your home inspector. I've worked with a number of home inspectors, and all home inspections are not created equal. And so I have a great couple of home inspectors that I really love their reports. They're very thorough. Again, that's directly related to identifying that right real estate professional for you. And then your insurance broker. Ms. Elaine Turner with Atlanta Premier Insurance Agency. She's awesome. I call her and I just say, help, Elaine, help. And she's like, what do you need? I'm on it. And she's amazing because she has a number of insurance companies that she will research for you. So I always explain to people that Elaine is a one-stop shop for you. And then, of course, your closing attorney. We have closing attorneys that we work with, but that is the place that the goal where we're trying to reach is to get to the closing table so that you can get the keys to your new home and be able to start to make new memories. I am going to stop talking for now, but I do want to say we will have an opportunity for you all to answer your questions if you'll just drop them in the chat, because I know it'll be a lot of information, so I don't want you to forget your question, and we will address those for you all.
Hi, Tianna. I have a quick question that popped in the chat if you have a moment.
Yes.
We have a question. If there are issues during the inspection, do you forfeit your earnest money?
So no, the inspection happens during due diligence. Oftentimes I ask for a 7-day due diligence. And so as soon as we're under contract, I schedule the inspection sometimes within the very next day or within a couple of days. And that way we will have time to review the report and decide if you would like to move forward with the deal. So your due diligence period is your trial period where you have an opportunity to do as much research and look at the house and inspect it as much as you want to. And you decide in those 7 days if you're like, I love it, I want to continue with the deal, or I don't like it. And if you don't like it, I will terminate the contract and you will receive your earnest money back. Okay. So next up, we have Mr. Jerome Jackson. Jerome, are you on the line? Yes. Jerome is with Southeast Mortgage.
Yes, I am.
You're here. Hi, Jerome. He's
Hello.
with Southeast Mortgage. He's also a native from here in Atlanta, specifically DeKalb County. I grew up in the city. I think you grew up in the suburbs, right? No, I'm just, but I'm from DeKalb County, and he lives here in Atlanta with his wife and his daughter, who's in college right now. But well, not right now. He's at his house right now because of COVID. Right. But Jerome and I have facilitated a number of deals together. And what I love most about what he does for my clients is he takes his time. The word that I mentioned earlier in the presentation, patience, he's very patient with my clients. So however much time you need, he explains it to you. He's able to break it down. And so he's a little bit of a teacher, maybe speaking something into him, after life in the mortgage industry. But he has been in the industry since 2001. So he is definitely a vet and will be able to answer any questions that you all have about the lending process. I'll turn it over to you, Jerome.
Hello, how's everyone doing? Well, I'm sure I can't hear you. My name is Jerome Jackson, as Tianna said. Been in the industry since 2001, and I briefly wanted to go over the path to homeownership. I can cover the first 3 in basically one little session, and that's becoming pre-approved, getting organized, and applying for your loan, because I'll do a pre-qualification, just ask some questions first, and pretty much know by a conversation if you're qualified to purchase a home. Then I'll get some more in-depth information. And while I'm getting this information, I'm jotting it down or I'm typing it in my computer. And after I get this information, it's pretty much a loan application. So I go from gathering getting some verbal information, gathering information from you, and then gathering some docs. After that, that little 15, 20-minute conversation, you pretty much apply for a loan. By then, I'll probably have looked at your credit. All I have to do then is just gather some documents. And really, I get the basic documents to let me know if you can and will be able to purchase a loan. If you're employed by a company, those docs will be last 2 years W-2s and the most recent 1-month pay stubs. And then I'll verify where your down payment is coming from. Whether that will be from your savings, mutual fund, IRA, 401k, or a gift from someone, a documented gift from someone. Once that's done, send your pre-approval out to Tianna. You're out looking for a home, find a home, and while we're under contract, it leads me to the do's and the don'ts. you go to processing, order your title, order the appraisal. We'll wait on the inspection, make sure everything is clear, order the appraisal. You go into underwriting. While you're in underwriting, which is 2 or 3 days, there's the do's and the don'ts. Don't open any accounts. Don't apply for anything. Don't pay anything off. Stay at your job, please, like until after closing, because that happens more often than you think. People, I'm already approved, they quit their job. Or we verify the day of that you still work there, the day of closing. Don't consolidate any student loans. Don't consolidate any debt. If you have, and there's something on here that's real big. If you hear anything, or you have friends that tell you they did this or they did that, hear them, but don't act upon it, please, because that can be very detrimental to your loan. And the last thing is deposits. No cash deposits. Please don't transfer money to or from, because any account that money comes from, we have to see that account. And if you actually put cash in that account and we can't trace it, then that's very detrimental to your deal. So those are some very critical do's and don'ts during this process. So you're in you're in underwriting. You come out of underwriting, and there's what we consider a conditional approval, right? Mm-hmm. And I'm jumping around a little bit. I'm sorry, Tianna.
Oh, okay.
The conditional approval comes out. Your loan is approved based on these things you need to fulfill. It may be homeowners insurance, the title from the attorney. We still haven't gotten the appraisal back. They may see deposits, $100 they'll deposit, or cash app deposit, or payment, and they want to know what that is. They may see an IRS debt on there that was not disclosed. They want to see, okay, do you owe the IRS? So you got to start providing documentation for that. All of this stuff derives from the bank statement. So once those items, it may be anywhere from 2 items to 10 items. Once they're complete and we receive the appraisal back, the value is fine, we're pretty much closing. So that process can be as short as 21 days, but every contract is typically a 30-day contract. Mm-hmm. And that's, a very quick way of describing the mortgage process. It's not simple. It's very simple. I just try to gather everything up front so I won't bother you guys during the process, because most of you guys are trying to work or sleep during the day, one of the two from working. So very, very simplified process when you're working with myself and Tianna.
Yes.
What else do we have? Okay, we've gone over the pre-qualification and pre-approval. Pre-qualification typically does not require me to pull your credit. I can have a conversation and pretty much ask you off-the-wall questions and see what type of credit you have. If you say something about American Express or something like that, then typically, you pay your bills and you have pretty decent credit, or you did have at one time. If for some reason you say, well, I went and got a car, and you tell me where you got the car from, and I ask you your interest rate, and based on your interest rate, I'll be able to tell you based off that conversation, okay, credit's probably pretty decent just from a conversation. After that, then, of course, I said I go into the pre-approval process and things are like that by pulling your credit. So that's pretty simplified. And all this can happen within a 15, 20-minute conversation.
Yes.
Pre-qualification, pre-approval, and if you have your docs on you issuing the pre-approval letter, it can happen very quickly.
Yes, absolutely.
Yep.
I was going to say, I know firsthand, I had a good friend to reach out to me. It literally was the day before Thanksgiving, and she was planning to relocate to Atlanta and knew the house that she wanted. And she said, well, I have to find a lender in Georgia. I said, look, I have you. And I connected her with Jerome and literally had a pre-approval that day, the day before Thanksgiving. Did you all hear me say that? The day before Thanksgiving. And that's what my team is about. If we have that 20, 30 minutes to sit quiet to help someone, we're willing to do that. And so she was able to close on her home before the end of the year. So I think we closed on New Year's Eve.
Yep, New Year's Eve. Absolutely.
Jerome, we have a quick question in here if you have a moment.
Sure.
What is the ideal salary for a first-time home buyer?
Was that for Jerome or Tianna?
Either.
I'm sorry, I couldn't hear you.
That was for you, Jerome, the ideal salary for a first-time home buyer.
Well, there's really not an ideal salary. I've seen people, have that were seasoned individuals that have been in the workforce for 25 years and they've made $45,000, but they have very minimal debt, and this is their first home. Whatever fits their budget. And then you have the young up and coming 25-year-old that came out of college and got an $85,000 job with $85,000 worth of student loans. So really, it just depends on the individual and their financial situation.
Mm-hmm. So the best thing I always say is to speak to a lender. If you want to know where you are, like where you stand, the first step would be to speak to a lender. And he, like Jerome said, once he pulls up your credit and has a conversation with you, he could say, oh, hey, I'm prepared to issue you a pre-approval, or he may give you some conditions on what you would need to do to be approved for the loan. So it might be paying down a credit card to a certain percentage, and he'll tell you exactly what it is you need to do. Looking at your credit, he may ask, like, is there any additional income that you haven't shared with me? Some of the takeaways I definitely want you all to hear is it is so critical to just be upfront. This is a non-judgmental process. As I said earlier, our goal is to help you all to get into your home. It's the best thing is to always be transparent. If there's something lingering out there, please share that with Jerome, because he's able to address, if he knows early, he's able to coach you on how to address it, versus we're one step from the loan approval and this thing pops up. So transparency is critical in this process.
Right. Let me add one quick thing that if anybody, this credit repair thing is real big now. So there's technology in place to see certain things that used to be on your credit that you think are hidden from individuals. So transparency definitely is big, because there's things when I'm taking your information and getting your pre-approval that I can't see. But once we start, if you had student loans that you defaulted on and someone cleaned them off, if you had a foreclosure that was last year and somebody cleaned it off and your credit looks perfect, once we start, there's a fraud guard that is linked to your personal and your social pretty much. And we can pretty much see all of that. Those are the only two things. If somebody cleans collections off, that's different. But if someone cleans student loans off and federal student loans and foreclosures, both are pretty much linked to your social. One we pull through Fraud Guard. The other one, if it's a government loan, VA, USDA, or FHA loan, we pull something called a CAVERS alert system, and it comes up default, U.S. Department of Education, and that kills your loan right there. So those are things you can be transparent about up front to save yourself a lot of time, heartache, and money.
Mm-hmm. Jerome, do you have 2 minutes to talk about bankruptcies and how does that play in the process?
Absolutely. So with the individual, there's two types of bankruptcy. There's a Chapter 7 in which you wipe all the debt out, and there's a Chapter 13. With the Chapter 7, there's a filing date in which you go in and you file. Typically, it's discharged within 120 days. If you're discharged or filed for just financial mismanagement, or you just fell upon hard times, there's a 2-year wait from the date of discharge for Chapter 7. If for some reason there's extenuating circumstances, you got sick, you lost your job, death in the family, something that you just could not help, then there's a 1-year wait, minimum 1-year wait, and we can make an exception. For Chapter 13, there's once you make at least 12 payments into the Chapter 13 process, then if you get permission from your trustee, which they almost always grant, then you're able to purchase a home while you're in a Chapter 13. We just have to include that monthly payment from that trustee, along with all the other debt that you have. So it is possible to purchase while in the 13. If for some reason the 13 is discharged, it's going to be what we consider a manual underwrite until you hit that 2-year period, but you still can purchase.
Perfect. Thank you so much. Thank you,
No
Jerome,
problem.
for your time. And hopefully you can hang out with us for a few more minutes in case there are
Yeah.
any questions that pop up later on.
Mm-hmm.
Right now, I
Absolutely.
would like to turn it over to Miss Elaine Turner. Elaine is with the Atlanta Premier Insurance Agency, and she's worked in the insurance field for over 24 years. And I started the presentation by saying I have a phenomenal team, and I hope that you're hearing a number of years of experience that they have in their industries. So they are who I consider the industry experts. Elaine has her own successful agency that's located here in the heart of Marietta. And she attended college in Columbus, Ohio. I think we may have some people from Ohio on the line. And she's very, very active actually here in her community in Marietta. And so Elaine, are you on the line? Uh-oh, did she get on?
I'm here.
No.
Still
How
getting
are
used to
you?
this Zoom thing. I'm wonderful. How are you?
Good. Thank you for joining us.
Absolutely. Thank you for having me. So I know that we are pushed for time, so I'm going to try to go a little bit fast. Can everyone hear me? I guess
Yes.
I won't know if they can hear me. Okay.
Yes, we can hear you.
Okay, wonderful. Okay, so I wanted to talk about the difference between homeowners and renters for those that have renters insurance. Renters insurance is usually about $200 to $300 for the year, and that basically covers your contents that you have. Homeowners insurance, what we're doing is we're looking to have replacement costs for the property. So what you may purchase the property for and what it costs to rebuild it may be two totally different numbers. Because we're taking into account what it would cost to replace a roof, the inside, drywall, counters, and all of that. So those numbers may be two totally different numbers when it comes to homeowners. So that's kind of the difference between the homeowners and the renters, and the reason that you would see a homeowner's policy that would be a little bit more. There are no two policies alike. So when you go with a captive agent, maybe a Nationwide, or you may go with a State Farm, policies are different. There are certain things within a policy that are the same: dwelling, other structure, liability. Those things are the same. But then with the different carriers, there are additional benefits and features that they build into the homeowner's policy. And that kind of segues me into the next one. One of the carriers that I have, they offer a warranty within the policy. The average warranty is about $350 to $400, $500 a year. So a warranty takes care of those things that a homeowner's policy doesn't, like an air conditioner. Something just happens to the air conditioner. Not that there was a fire or lightning, but it was just kind of like a faulty issue. It's not covered by the homeowners. A furnace, same thing. It's not a fire, a named peril. That's what this particular policy would have built into it. So when I say that no two policies are alike, that's kind of what I mean. Some of the other features that homeowners policies, some of them have that I have, they have a service line. So if there are pipes outside that burst and they need to be repaired, that may not be covered under the homeowner's policy as well. So that's another feature and benefit that is built into some of the policies that I offer here. Things that influence the rate. So I'm sure a lot of people will call around and they're kind of like, why is one person's rate one thing and one person's rate is a difference? So the reason for that is that homeowners policies take into account a couple things when we're doing quotes. Most of them now pull from the county records. So there's a lot of information that's already there. The county that it's in, that influences the rate. The credit score, that influences the rate. And the credit score that we run with insurance is a soft hit, so it doesn't affect your loan in any way. The other thing that influences a rate is if you've had any claims. Those type of things affect the rate. So that's why you get a difference sometimes from one to the other, and it just depends on the rates that the insurance company has filed with the Department of Insurance. Deductibles play a role in the rates as well. Sometimes when people call to get a homeowner's quote, just because they don't know, they may call another one, and unaware to them, they're so excited because their rate is so much cheaper than everyone's, and they just can't wait to give Tianna a call or Jerome a call and let them know that I have got this rate. They were charging me $1,000 over here, and I got it for $500 somewhere else. Well, what they probably don't realize with that quote is probably that deductible is 1 or 2% of the dwelling coverage. So they could end up with a $3,000-$4,000 deductible unaware. Typically, I quote deductibles at $1,000. That's a standard deductible. So that all of those things influence the rate. The other thing is different with my agency is that I am a one-stop shop, as Tianna mentioned. So what I do is when you call, I have some carriers that if Jerome needs a quote, let's say he needs somebody, they're about to close in 3 hours, the agent that they thought the client was going to use is out of town or sick or whatever, and they can't get the documents. The house can't close without the insurance information. I do have one carrier that I can literally get a quote and done. I do have to speak with the client, but I can get a quote done in like 60 seconds. I can really get one done that fast. And they offer good coverages. So the benefit of a broker or independent agent is that we have multiple carriers. So we're not locked into just a Farmers. If you call Farmers and you don't like the rate there, that's kind of it. But the benefit of me is that I have multiple carriers, very much the same as going to the grocery store. You wouldn't want to go to the grocery store and want to pick up green beans and they only have one type of green bean. So that's the benefit of having an independent agent, a broker. And the last thing I'll leave you with is cheaper is not always better. So don't allow the cost to make the deciding factor. Allow what you choose, the deciding factor, to be the benefits and the features. Because when Jerome is done and when Miss Tianna is done, it's me. And you don't want to call me or you call me, you remember this presentation and like, you know what, I had this claim, I filed this claim. Miss Tianna, can you give me the name of that young lady that was there? You give me a call and you ask me a question and you know what, my air conditioner, it just went out for no reason. I really don't know why. And they're telling me it's not covered under my policy with another agent. You know what, it's not covered because you didn't pay attention to the benefits and the features. So don't only just be led by the cost. Be led by what all can I get for this price. So,
thank you. Thank you, thank you, thank you. And Elaine, you actually brought up something too that I advocate as well for my clients. So if in the event that the insurance does not offer the home warranty, that is something that I often ask for 1 year for my clients from the seller. And actually my client that just closed, when we did our final walkthrough, the air was broken. The air has worked all the other 99 times that we were in that home. And, and it was broken 2 days before closing. And we had to literally call the home warranty the day after closing to ask them to send an air conditioner specialist out there to address the issue. So it is active the day of closing. That's when it's paid and you're able to use it. So I definitely have had that experience. So thank you so much. I have a couple of questions. One, actually, it will be for Jerome and then Elaine, for you as well, about number one, Jerome, the ideal credit score to purchase. And then Elaine, I know that credit score sometimes plays a part with the insurance as well. So if Jerome, you'll address the ideal credit score for purchasing.
Yeah, right now the ideal credit score for government loans, well, let's just say all loans, is 620. Government loans being VA, FHA, and USDA. Well, let's just say government being VA and FHA are 620. Rates are very competitive, but you need at least a 620 to really get in the conversation about getting approved. I pulled a credit today and I looked at the profile and I was like, okay, it's going to be iffy. But because she had a tremendous amount of income, it approved the 620 with just enough money to close. Not, I put $1 more than what she needed for close. It was hypothetical, but I put it there and it approved it. If it would have been 1 point lower, she would have had to get her score up a little bit. So 620. When you're going conventional's minimum score is 620, but everything with conventional loans is credit score driven. Your rate, your private mortgage insurance, which is risk-based insurance, and your loan to value. So everything is risk-based, but it starts at 620, and some loans can get approved at 620. Your rate just will be a lot higher.
Thank you.
Mm-hmm.
And Elaine?
And then with insurance, we don't actually see scores, so numbers or nothing like that comes across. It's kind of built into the algorithm when we're doing the quote. Obviously, when we get someone, I had someone in Atlanta, Fulton County, purchased a home. It was about $600,000-700,000. It was a newer home. The rate came in at $800.
Wow.
It's like unheard. That is like unheard of.
Yes.
But that told me that he had a great credit score, and that it was a newer house too, so that played a role into it as well. But so we don't actually see numbers, so I can't give you like Jerome did, a 620 or 5 something. We don't see that because it's kind of built into the algorithms. But I can tell based on the quote, if a person has good credit or not.
Perfect. Thank you. And this next question is also important in the chat, and it might be definitely relevant for Ms. Tracy Turman, who's coming up, but is there assistance for single parents on disability? So Jerome, maybe you can address, like, if for individuals who have a fixed income, who are on disability, for example, how does that work in the lending process?
Yeah, there are, but yet and still, just like anyone else, there should be. There's minimum debt to income ratio guidelines. So if they have a decent amount of credit, a decent amount of income, or very little debt, and they fall within the guidelines, then yeah, definitely they'll qualify for down payment assistance.
Okay, perfect. Thank you both so much. We are going to. Thank you. Now let's have Ms. Tracy Turman, who is the housing coordinator for Georgia Department of Community Affairs. Tracy, so she partners with various lenders, realtors, and nonprofit organizations to bring awareness of housing resources available here in the state of Georgia. For those who are in the state of Georgia, one of the most popular programs is the Georgia Dream Home Ownership Assistance Program. And I actually have had 3 clients who have closed with Georgia Dream, and it is phenomenal, the amount of support that they give to individuals towards down payment assistance, as well as towards their closing costs. So Tracy, I would like to turn it over to you.
Awesome. Well, thank you so much for Tianna for having me this evening. And again, good evening to everyone. I am Tracy Turman, the Home Ownership Coordinator for the Georgia Department of Community Affairs. Tianna, will you be advancing the slides for me?
Yes.
Okay. All right. If you can go to the next slide, please.
Mm-hmm.
With the Georgia Department of Community Affairs, again, we're the only state assistance home ownership program. We assist first-time home buyers with down payments as well as closing costs. Now, our definition of a first-time home buyer, according to the IRS, is someone who has never owned a home or someone who has not had interest or ownership in a home within the last 3 years. With the Georgia Dream program, you cannot own any other real estate at the time of closing. The program has household income limits, which we'll see in the next couple of slides, as well as the sales price limits. However, if you are a second-time home buyer, if you're purchasing in one of our targeted counties, we will then waive the first-time home buyer restriction, which will allow you to still take advantage of our program. The asset limits with the Georgia Dream program, if you're on this call tonight and if you're sitting, let's say for an example, if you have $80,000 in your checking and savings account, one would ask, if I had $80,000 in my checking and savings, why would I need the Georgia Dream program for assistance? Well, an applicant must not have more than $20,000 or 20% of the purchase price, whichever is greater. If you let's look at that $80,000 that you're sitting on, well, what if you're purchasing a home that is $250,000 and you're putting money into the transaction? Well, if you're putting money into the transaction, that is going to lessen your amount by $20,000 or 20% of the sales price, then you're fine. And also know that your retirement accounts are not taken into consideration. So that $100,000 that you may have in your 401k, do not worry about it. We are not looking at that. The way that the Georgia Dream program is set up, you have the Atlanta Metropolitan Statistical Area. There are 29 counties which make up the Atlanta MSA. In essence, that's essentially just the metropolitan Atlanta area, as opposed to statewide. And as you see in the next slide, we're going to look at the difference in the income levels. For a 1 to 2 person household that's purchasing inside of the Atlanta MSA, it's $80,000. For 3 or more persons, the maximum household income is $92,000 and the maximum purchase price is $250,000. Statewide, for a 1 to 2 family household, the maximum income is $69,000. 3 or more persons is $79,000, and your maximum purchase price is $200,000. Now, with the Georgia Dream program, we require you to take a home buyer education course. On average, 99% of our buyers are first-time home buyers. So we want you to be educated about the entire home buying process. This class tonight gives you a great snapshot of the overall home buying experience. To do the home buyer education course, you can do it in a workshop setting. You can do it online, or you can do it on one-on-one counseling. We all know in the era of COVID-19, a lot of those workshop classes are now online. What I want to caution you is when you are looking for a home buying education course, because there are a lot of HUD-approved agencies that will charge you. Do your homework and find an agent, a HUD-approved counseling agency that will do a virtual workshop for free, because they are out there. Mm-hmm. If time is of the essence and you have to do a home buying education course online, you can go through eHome America. If you access that link through our website, it's $50 to take that online course, and you can take that 24 hours a day. It does not matter.
Wow. Sorry about that.
Let's talk about our down payment assistance options. With the Georgia Dream program, in order to take advantage of our assistance, you must do our first mortgage, which is a 30-year fixed rate loan. However, our assistance option, which is considered a soft second or a silent second, we have 3 options up under our assistance options. The standard is $5,000. It's available to everyone that meets our income limits, our sales price limits, our ratio guidelines. This could be a new construction, it can be an existing home. Pretty much you can qualify for our standard option. But next we have our PN option, which is protectors, educators, and nurses. And as you see, there's a $2,500 bump. So it's $7,500 in assistance. But when we talk about the PN option, guys, we talk about this in a really broad context. It's not necessarily what your position is, it's who pays you. Giving an example, if you work for the Atlanta Police Department, you do not necessarily have to be a police officer. You could be a mechanic for the police department. you're paid by the Atlanta Police Department. Therefore, you would qualify up under the PAN option. Let's say you were a bus driver for the DeKalb County school system. If you're paid by the DeKalb County school system, you qualify for the $7,500 in assistance. The same applies if you were an orderly at Grady Hospital. Now, our choice option, we have $7,500 in assistance as well. And I know someone asked a question in the chat feature, if you're a single parent that's disabled, could you qualify for assistance? With our choice option of $7,500, if you're disabled, or if you have a disabled family member that is going to be residing in the home full time, you can qualify for $7,500 in assistance. Now, the easiest way around the choice option, if you have a Social Security awards letter or a Social Security denial letter indicating that you have a disability. You will provide that information to the Georgia Dream participating lender so you can take advantage of that choice option. Our Hardest Hit Fund Down Payment Assistance, which is a temporary program. The program has been around since 2017. The program was designed, we received funds from the U.S. Treasury to go into stabilized communities that were hit the hardest due to the economic downturn. So these are areas that had high foreclosures, they had negative equity. We asked Treasury for these funds to assist our first-time home buyers. Again, the first loan was originated May 25th, 2017. We started out with 10 counties, but because we've had such an overwhelming response with the program, 3 of those counties no longer have the designation of being a hardest hit county. Let's talk about the program. It meets the same requirements as the Georgia Dream standard PAN and choice, as I just mentioned. It works in conjunction with our first mortgage. You cannot combine it with any other assistance. You must contribute a minimum of $1,000 into the transaction. But what is that $1,000 that you must contribute? Remember, Tianna mentioned in the beginning of the call about earnest money. Well, if a seller is asking you to put up $1,000 in earnest money, well, then you fulfilled your requirement. But let's just say that earnest money was $500. Well, you can use your appraisal. We know that you must have an appraisal before you close on your loan. Well, if that appraisal is $300, that could be added with your $500. Home inspection, we know you're not going to purchase a home without having a home inspection done. Let's say that was $200. So now you've built your $1,000 into the transaction. With the hardest hit fund, the loan amount is $15,000. The interest rate is 0%. However, that 0%, the $15,000, if you go to the next slide, Tianna, it is forgiven after 5 years. So the only requirement is that you remain in for 5 years. So the $15,000 is actually forgiven after 5 years and 30 days. Next slide. The eligible counties for the hardest hit fund down payment assistance is Bibb in the metropolitan. Let's start with the Metro Atlanta area. In metropolitan Atlanta, it's Fulton, Clayton, DeKalb, and Douglas. And then what is considered statewide would be Bibb, Chatham, and Muskogee. The property must be an existing home only. So it does not apply to new construction. Remember, the Georgia Dream standard PAN and choice could be anywhere, new construction, or an existing home. But with the hardest hit program, it must be an existing home. And what our definition of an existing home is a home that has been previously occupied. Now, let's say, for example, there was a home that was built in 2019. And for whatever reason, life happened for someone and they had to sell their home. It does not matter how long that property has been in existence, but it must have been previously occupied. Next. The last day for new loan reservations for our hardest hit fund. This program is going away, and I'm very happy to announce we extended it because it was supposed to end on June the 30th. So they extended it till August the 31st. So if you're wanting to take advantage of the hardest hit fund down payment assistance, that $15,000, 7 of our hardest hit counties, now is an opportunity for you to do so. Which I don't know if this was mentioned in one of my slides. I don't know if this was missing or we bypassed it. But the Georgia Dream program as a whole is continuously funded. So the options that I mentioned with our standard, which was $5,000, and our pen and choice at $7,500, I think is missing, Tianna. If you go back one other slide, let me just see. Okay, I think we bypassed it there. Okay, with the, just back up one other slide. No, we're going up.
Okay.
There we, one more. Let's see.
I think, does it have the FHA?
Okay, down payment assistance requirements.
Yeah.
This is important because I did not mention it. With the Georgia Dream program, we are continuously funded. You do not have to worry about the Georgia Dream program not having funds available for you. We actually secure our funds a year in advance. The program is funded by the tax-exempt bonds that we issue. However, the choice and continue funded is never going to, I hope not anyway. But when you sell your property, refinance your home, or you no longer occupy it as a primary residence, this assistance must be paid back. The monies for our standard pen and choice are coming from a different pool, unlike the funds that we receive from the U.S. Treasury. So as I mentioned, if you're disabled or if you're a first responder in healthcare or education, that $7,500 and $5,000 is never forgiven, which means whenever you sell your property, refinance it, or no longer occupy your home as a primary residence, then the assistance must be paid back. And the question is asked, why do I have to pay back the assistance if you're helping me as a first-time home buyer? Well, we're hoping that as your home appreciates in value, you have equity, which Tianna mentioned. Once you sell or refinance your home, then the assistance of $5,000 or $7,500 is absorbed with that equity. Actually, those funds go back into our pool so we can help the next generation of first-time home buyers. I wanted to address that because I knew something was missing.
Sorry about that. Thank you, Tracy, so much. I want you all to hear the differences between the two, because the hardest hit fund is forgiven after so many years. So if you are ready to go and would like to take advantage of the hardest hit funds, then I am just one call away to get the process started. Tracy, thank you so much for this information, and Georgia Dream has just been a blessing to so many, to my clients who have used it. It has really made it possible for them to be able to purchase a home. So thank you so much for being a part of our presentation this evening.
And thank you for having me.
Thank you. Oh, I have a couple more slides. Sorry about your credit score, the approval process.
Right. This is important. With the Georgia Dream program, it requires you to have a middle credit score of 640 or greater. So you must have a middle credit score of 640 or greater. It cannot be a 639. If in the event that you do not have a credit score of 640 or greater, then we have our Ready, Set, Go program, which is $50. It's a financial literacy course, which pairs you with a housing counselor. It looks at your credit profile and let you know what needs to be addressed. You have up to 3 meetings with the home buyer education counselor. Yeah, I'm sorry, with the housing assistance counselor. Now, home buyer education, as I mentioned, is a requirement of the Georgia Dream program. You have to get pre-qualified with a participating lender. We are a state agency. We cannot lend directly to you. We have over 90 different lenders that are a part of our lender network. Once you get pre-qualified with a lender and you locate your property, you contact Tianna to help you locate a property. You will then go up under contract that goes to the lender for the loan approval process. Once that approval process is completed, it comes to our office for a compliance review. And once that compliance review is completed, then your file goes back to the lender for your closing, and then congratulations, you are now a home buyer, courtesy of the Georgia Dream program of making your dream a reality.
Yes, that's my favorite part.
And there's my contact information if you have any questions regarding the home buying process or selecting a lender, or even your housing counseling. You can always contact our office. Please use us as a resource.
Perfect. Thank you so much again, Tracy, for sharing this wonderful information. And I will send out an email after the presentation and the next day that will have all the contact information of the individuals on the call tonight, so that you all will be able to contact them when you're ready and have questions.
Thanks again for having me.
Thank you. Very good. So next up we have Mr. Art Christian, who he is a 26-year practitioner, and he is with the Housing and Community Development in the Atlanta metropolitan area. He works specifically as a community development specialist with the Fulton County government of Georgia. And he manages the Home Ownership Assistance Program known as HOP. And this is another down payment assistance option, but it's specifically for homes in Fulton County. Art, are you on the line to tell us about the HOP program?
Yes, I am. Thank you.
How are you?
I'm doing great. Good evening, everybody. And thank you to T. Bailey Realty Group and Warrick Dunn Charities, whom back in the mid-90s, I had the opportunity to actually assist with one of your homes, which was a great experience. But getting down to it with Fulton County's program, Fulton County is a down payment and closing cost assistance program that's made available to households who are at or below 80% of the area median income. And you'll see later in the second slide what those numbers are. Basically, the way our program works is we're able to offer 6% of the sales price up to a maximum of $10,000 for any combination of down payment and or closing costs for homes that are purchased in our eligible area. Our area includes all of Fulton County except for the cities of Atlanta, Johns Creek, Roswell, and Sandy Springs. So that means it includes Alpharetta, Chattahoochee Hills, East Point, Fairburn, South Fulton, Hapeville, Milton, Mountain Park, Palmetto, and Union City. And the reason why we can't do those other areas is they get funds through the federal government similar to ours, and we can't cross jurisdiction. Mm-hmm. And the way our program works is you actually would make an application through one of our participating lenders, and the T. Bailey will be able to give you the information, help you through that process. And for example, Southeast Mortgage is actually one of our participating lenders. Mm-hmm. What they do is they're your primary contact. Not only will you apply for a first mortgage loan through them, you apply for a soft second mortgage through us for Fulton County for the HOP assistance that you receive. The way our program works is as long as you keep it as your primary residence, 20% of our HOP loan is forgiven years 2 through 6 after your loan. So let's say, for example, you receive the maximum $10,000. That means you purchased a home that costs $166,667 and above, up to $213,000 for an existing home and up to $227,000 for a new construction home. 20% of that is forgiven each year. So let's say you got the maximum $10,000, $2,000 of that would be forgiven years 2 through 6. So by the time of the 6th year, you kept it as your primary residence. You don't make any monthly payments. There is no interest rate associated with our loan. And it basically turns into a grant. And you place a lien on your home initially. At the end of that 6-year period, we do release that lien and you haven't paid any money out. And basically it's a huge benefit for people who really meet the qualifications is what you're looking for. Let's see. And you see on the slide now, you're seeing, for example, a one-person household, the current income limit is $44,650. For a four-person household, for example, it's $63,750. Now that amount actually goes up each year. And come July 1st, it's actually going up between $2,000 and $3,000 per category starting July 1st, which is a great thing. So it makes it more affordable, available to more people. And let's see, those are the basics about our program. I know we're short on time, so if you have any questions, let me know. And I will actually put, you can use that phone number there to contact one of our staff, and they'll get you in contact with me. If you have any questions, put it in the chat, and I'll be sure to answer.
Perfect. Thank you so much, Mr. Christian, for this information. I actually have a client right now who is just being pre-approved and will be taking advantage of the HOP program. So I'm excited for her. She's really, really excited. So thank you. I may be calling you with more questions. Thank you for your time. We have one more presenter, Mr. Damian Smith, who is with us from the Neighborhood Assistant Cooperation of America. Most people know it as NACA. And Mr. Damian is a community builder as well. But tonight he is community building, and he is also representing NACA, where he works there as an associate broker. And he has been in real estate since 2010. One of the things that I just enjoy about the time when I spend with Damian is just he is so passionate about the community and helping families to obtain home ownership. And so NACA is a housing program for low to moderate income, individuals low to moderate income. So Damian, are you on the line to tell us some more information about NACA?
Yes, can you hear me?
Yes.
Okay.
How are you?
I'm doing very well, and yourself?
Good. Thank you for joining us.
Oh, you're more than welcome. Good evening, everyone. I know I can't hear you, but still good evening. I hope everyone is being well and safe, and your families are safe and doing well. I kind of serve really, which is strange, which this fulfills both positions with NACA, but I started with them in 2010 as a real estate agent, and I'm transitioning into the regional community organizer. So I'm kind of here in two positions, so it's really, really weird. But I'm not sure if you all are really familiar with NACA, but NACA stands for Neighborhood Assistance Corporation of America. It is a low to moderate income housing program, which is everything, all encompassing. Everything is there. We have the lenders, we have real estate agents, we have everything in-house. However, you can still use Tianna or anyone else you want to use as your real estate agent. But some of the things I want to talk to you about NACA that's very important is there's no down payment, no closing costs, no PMI, no points. And I'll even talk about myself and infuse myself in it. Below market interest rates. All of those things we don't pay. We don't even pay for an appraisal. The lender actually pays for that. You don't even pay attorney's fees. The lender pays for that. So all of these things that traditionally we might pay on the outside. And just a little bit more about NACA. NACA's a unicorn. Nowhere else does it exist in the world. It is of itself, by itself, and only itself. So it's very hard, even for myself, to kind of sometimes understand it, because when you look at what's going on in the rest of the world, NACA doesn't apply to that. So you have a unicorn. And so like NACA is really awesome in that you can get a single family home, a duplex, a triplex, all the way up to a quadruplex. The only condition with the multifamily units is that you must live in one of the units. So it also gives you an opportunity of wealth building. How can you grow your wealth? Now, traditionally, and my philosophy is always trust but verify. However, with what I'm saying, trust what I'm saying, but verify it just to make sure it's correct or that the information hasn't changed. But if you buy a multifamily and you go to, say, any of the banks out here, they're going to ask you for 10%. NACA doesn't do that. They also, with the multifamily unit, say if you got 4 units and they rent for $1,000 a piece, they will take 75% of that to add it to your monthly income to help you qualify for that building. So we do all kinds of unique stuff. I have a client now. We are character based. I myself went through NACA back in 2004, and I sit here before you. I had a 480 credit score. Once again, 480 credit score. I couldn't get a hamburger on credit. So that's how bad I was. But I have a 2.23 30-year fixed interest rate with NACA with a 480 credit score. So it is not credit driven. What it is this character based. How do you pay your bills? Do you pay on time? Do you have late? Do you have a pattern of savings? Have you been paying your rent for the last 12 years? How long have you been on your job? Have you done your taxes? Do you have any bankruptcies, judgments, liens, foreclosures on those? And just to let you know about bankruptcies, we still work with them. NACA is not a no or yes. Sometimes it is a not now. You may have to work on things. I myself, when I went through the program, I started in 98. I didn't close until 2004. Why? Because I couldn't stop shopping and do what the counselor asked me to do. So a lot of times it's really based on you and what you're doing and what they ask you to do. And many people tell you, and we have a lot going on. Some people like NACA, some people don't. But I've even had my own clients that didn't want to go through NACA because of what they told them they had to do. So it's not always is NACA is bad. It's just what they require people are not ready to do, or they want to go ahead and get a home faster. And it's understandable. Like I say, I have clients that have gone outside of NACA. Now, me, myself, one of the other unique things about NACA is to be able to buy your interest rate down, which allows you to buy more house. When I got qualified, I was only eligible for $111,000. And I looked at my counselor, I'm like, well, where the heck you think I'm gonna live and be safe for $113,000? And so what happened was NACA is payment driven. What is in your monthly payment? They don't just let you go get a $200,000 house or $150,000 house. It's what's affordable in your monthly payment. So here's the trick to that. When you buy your interest rate down, it says you can buy more house, but you're paying a smaller payment. So for instance, the case with me, I was eligible for 113, but by buying my interest rate down to 2.23, I was able to get a house for 133, but paying a payment as if I was in a house for 113. And where does that money come from? That money comes from you. It comes from the seller. It comes from many different places. Like with the city of Atlanta, we work with them in certain areas in the city of Atlanta. We work with them to get this $20,000 grant that helps buy your interest rate down, which now makes you afford for more house. One of my clients I'm currently working with, his monthly payment is $478. Now, that's only $75,000. Now, to be honest, where are you going to find a house with 4 walls and a roof that is not warmer outside than it is in your house? But with the grant from Atlanta, that now takes him up to about $110,000. And NACA is 100% financing, so there's no second silence. There's nothing. You're getting 100% loan. It is a full documentation, conventional loan that's structured as a rehab. What do I mean by that? So in the case with my buyer that only qualifies for $75,000, but with the grant, it pushes them up to $110,000. So if there's any work that needs to be done, he can get 10% above the purchase price as long as he qualifies within his monthly payment, as well as the house appraises for the purchase price. So now he can get the $10,000, which say if a house is $100,000, you can get $10,000 to do some rehab or some work in it. So it doesn't stop you from purchasing the house if you don't have the money and the seller is not willing to give you all of what you need. So that's one of the very unique things about NACA. And again, the interest rate. If I had not bought my interest rate down to 2.23, I would have paid $133,000 for my house and $180,000 for in interest, totaling about $310,000. By buying my interest rate down to 2.23, I'll pay $133,000 for the house and $45,000 in interest for the life of the loan. So that's another reason why you're wanting to buy your interest rate down, because it takes advantage of not paying all the interest. So, and it allows you to buy more house. I have a client, she only qualified for $200,000. Well, by the lender, the seller giving her $9,000 in closing costs, and some other monies, it allowed her to close on a brand new house for $237,000. You can get a new house, a resale, a condo, existing townhouse. It doesn't really matter. The only thing that we don't do is where you buy land and we'll build it for you. Or you buy, you can only do that if the seller, the builder is willing to have everything and sell it to you. But you can't buy land or a single wide. You can get a double wide, but not a single wide. So those are some of the nuances about NACA that is very unique. Now, the process is you have to sign up for a workshop. It's a 4-hour workshop. And now due to COVID, we're doing them online. For the last 6 weeks, we've been doing our Achieve the Dream, where you come in with all your documentation. You can come in today, see a counselor, get approved, move on to the underwriter, and say in a day or two, you out looking for a house, because we've already completed you through the first phase of underwriting. And like I said, that's full documentation, your bank statements, your pay, verifying your lender, your work employment, where you live. All of those things are verified before we let you go out and get a house. There's no pre-approval. You are verified and okay when you go out, so the chances are greater in our eyes that you get a home. Now, you don't have to be limited to low to moderate income. You can be higher income. We just limit where you live in our priority areas. But if you're low to moderate, you can live anywhere in the state, in the city, and we're 51 cities around the country, so it's not just limited to here. So only thing I'll lastly say is go to NACA.com, www.naca.com, sign up for a workshop. If you have any questions, I'll be more than happy to answer. Again, I'm just here to help. Thank you.
Thank you, Damien. That was awesome. Thank you so much for sharing with us. I want to say thank you again to all of the presenters. The purpose of us doing this is we want you all to have as much information as possible. You learned about a number of different programs and options, and we want you to leave hopeful and just to know you have options. There are a ton of options in the home ownership process. I know there are probably some questions, and I know we're over time. We can try to address a couple of those. Nancy, are you still on?
I am, and my coffee shop I'm camped out in has been very gracious with me. That due to COVID, everybody's hours have changed, and so they have extended their hours to let me sit here. So I'm grateful to them. So I do have one question, and Damien, you may want to just sum this up. There's a couple of questions regarding NACA and qualifications, some salary cap information, some other stuff. Is there a good point of reference for folks who want to get more information on NACA, or a point of contact to be able to talk to somebody through some of these questions?
So typically, the majority of them I can answer, but some of them I can't because I'm not a mortgage counselor. But the best way to find out is that you do the workshop, because everything I'm saying is expounded over the 4 hours, and they tell you all of the details and what you have to do. I can say is if I think I may have heard you say something about income. Income doesn't matter. My client now is on disability. I've even seen where they work with Section 8. I'm not that versed in it, but I saw that the Section 8 client, her monthly payment was $833. She only paid a month. She only paid $20, and Section 8 paid the rest. But that's also contingent upon the county that you live in if they participate in the home buying program. But the best way to get information, because right now you're not going to, when I tell you, when I did a workshop in December of last year, the appointments weren't until June or July. So you're not ever really going to get a counselor. The best way to get someone or to get the information you need is to attend the home buying workshop or contact me, and I can field. If I can't answer it, I can try to get someone. But when I say we are backed up and we saw almost 3,000 people every week all over the country for the last 6 weeks. So yeah, so we're not playing. We don't advertise. It's usually by word of mouth. My brother's been through it. So again, if you have a question more in detail, you can ask me. If I can't find out, I'll definitely try, but they don't get to answer the phone. They're working from can to can. These last 6 weeks, they work from 8 a.m. to almost 10 p.m. at night, servicing and getting people qualified. Sorry.
Wow. Wow. And again, we will send out the contact information for the presenters to the email address that you all use to register for the presentation. Are there any other questions that we haven't addressed, Nancy?
I don't think so. And thank you, Tianna. Thank you to all of our presenters tonight. And thank you guys for joining us. This was our first, but not our last. You know, something that we're truly passionate about is creating opportunities for folks. And it all starts with stability in housing. And so where you are on your journey is just that. It's your journey. Tonight will be the first step to learning more information. We will send out a copy of the PowerPoint, and we have also recorded tonight. So if I can get that in a presentation form that we can send out to you guys, whether it's, I'm not sure what platform that might be or file size, but we will work on getting that out to you as well. I know that was one of the questions that just popped up. And, you know, just keep an eye out. We hope to do this again. And if you're joining us from other states or other regions of the country for down payment assistance, look into your local area to see what's available to you. Housing is the best way to start building your wealth. And so we want to see that happen for your family and for you. And so keep on the journey, keep fighting the good fight. And we hope to see you guys very, very soon. Tianna, do you have any closing remarks?
I just want to thank you, Nancy, me and your team for allowing me and my team to partner with you all. And thank you, because Nancy is in Iowa preparing to decorate to surprise a family. So prior to the session, she just came back from her Target run. And I just want to thank you for your dedication. And I know this is probably some welcome, like sit down time. I know you're going to hit the ground running as soon as all of this is over. So thank you all for the opportunity. And I am here. I will follow up again with a copy of the presentation as well as contact information. And please, please, please take advantage of that one-on-one session so we can go ahead and make a plan to get you on the right track to home ownership. So thank you all so much and have a wonderful evening. Bye.